Hey everybody, President Bryn here with our Trader User Group Weekly Roundup. This is for trading week ending May 23rd, 2014. This will be an abbreviated update for this weekend. It's a holiday weekend here in U.S. markets. Monday will be closed. What I've got on the screen here is a daily chart of the E-mini S&P 500. You can see that we are still in our up mode that we've entered really since Q4 of 2012, and then we basically have been in this all the way up through where we are right now. There's just only been just a couple of instances where we've actually challenged the southern side of this channel, but we've only been outside of it maybe just a few days. Other than that, we're pretty much encased in this channel as we look right here. Now, I've got a lot of support and resistance lines here that I'm going to blow the chart up and I'm going to show you here in just 1 minute. But I wanted to just take a step back and just show you exactly where we are. We've been trapped in a tight range here, it seems like, for quite some time. So if I blow this up just to give you guys an idea and a perspective of what's going on, you can see here that this range right here, and I'll just put it in a box here, is kind of where we're playing right now. And we've been in this range here for quite some time. In fact, we kind of entered into it right in that area there, right around the beginning of March, and then we've just kind of, every time we get towards the northern boundaries of this channel, we've got sellers taking hold, and every time we get to the southern part of the boundary, we got buyers taking in. So we've been in this very tight range. Because of this is why volatility is at we've actually come down dramatically in volatility. We'll take a look at that chart in just 1 minute. You can see here for the first time, though, since Q4 of 2012, the 50 EMA, this red line here, has actually gone outside the channel. Now it's paralleling very tightly the southern boundary of this channel, but for the first time, we've actually moved outside the channel. And then, of course, the 200 EMA is slowly separating itself from the channel a little bit. So that does tell me that we are getting more and more sellers really pushing the market down when we get to the northern part of this boundary. Now, if I blow this up even more, just to kind of give you guys an idea and a perspective of where we're sitting, you can see all these tight support and resistance lines that I have sitting in here right now. You can see Friday we actually made a new high in the E-mini at 1899.25. We couldn't quite hit that magical 1900. Now, I thought we would hit it and just pull back just to hit it. It was a very light volume day, but we didn't. We got up to 1899.25 and we pushed back, and that was from the previous high that we made a few days ago, or a week or so ago, at 1898.50. And you can see these highs that are just sitting in here, and these are key touch points that I would call them for the market. Now, we've sat pretty much in this boundary here, the 1867.50 and 1887.50, for a long time. We've been in those areas for quite some time, but we actually broke out of that on Thursday of this week. Now, a lot of this is very low volume as we're coming up here and taking out and made this new high here, and then we closed at a new high on Friday. So I'm not really letting the excitement of having these being up in this area right here, the excitement of taking out these highs or taking out that high really to get me going, or holding above that one right there, at least for now anyway, because it's very low volume. If we do look at the volume, you can see here, and let's just kind of shrink it down a little bit. You can see just how this volume has been, below the watermark here. You can see right down in this area here. That's just kind of gives you an idea and a sense for, just how that volume has fallen off the table this past week. Now, we are coming into low volume months. We're getting ready to go into June and July, which are traditionally summer months. And U.S. markets traditionally, you've heard the saying, sell in May and go away. Although I do believe we could, right now in the S&P 500, volume and price action, or not volume, but price action favors the bulls, not the bears. We're in this, the center point of this channel is right in this area here, but we are in the southern area here. I do believe we're just going to have a lot of continued pressure here, and we're going to continue to grind a little bit. I think buyers definitely want to come in and take out the market and continue to support the market at a higher level here. And if we look at the 50 EMA, that's the other thing I wanted to show you. You can see here the support on the 50 EMA. We're just holding it. We haven't really been able to punch below it too much. I mean, we had one area here where we formed that key pivot low at 1803.25. But outside of that, the 50 EMA has been holding up very nicely. The other thing I want to show you is the 50 level on the RSI is considered, or a little bit of a sentiment indicator in my mind. And ever since we've taken out that that key pivot level held, and we've been heading back up into the channel again, we've been to the northern side of the 50 level of the RSI. So RSI has been over 50, and it's held very nicely. So until we break that back to the downside, and then we break back down below here and get outside that channel, I'm still going to be bullish, begrudgingly so, in a very, very grinding sort of way. That's the way we've got to look at this right now. If we look at our indicators and what it's telling us, you'll see here the way I use my charts right now on a daily. Excuse me. Looking at this, we are in an up mode on the daily charts with the S&P 500. If we look at the Dow, we look at the Dow futures here, you're going to see a similar pattern here. You're going to see that we've been in this very tight range. When we come down outside of this range right here, you can see that little area right there. When we're outside of this on the southern side, we have these pivots that seem to hold up fairly nicely, or at least they have held up very nicely most of the year, right? I mean, you can see this right here where they hold up. But we quickly find ourselves back in here where we're on the northern edge of the boundary. We got sellers pushing down, and then we got buyers pushing up down in this area here. Again, the 50 EMA is coming into play here with the Dow futures as well. We haven't made highs here in the Dow like we did in the S&P, but again, and the other thing I'm going to point out with the Dow is on the daily chart we're mixed. All right, we're a mixed condition on the daily chart with the Dow futures. So there's a little bit more hesitation in the Dow than there is in the S&P 500. NASDAQ, it's been really nice. We've had this nice takeout here, and we've actually performed very well. You can see here with the NASDAQ, we came in here and we found these support areas here in this shaded zone that I've got here. You can see back over in this area right here, it was resistance, but then everywhere else, what was resistance now becomes support. So this shaded zone is acting as support for us. Call it right around the 3,400 level in that zone right there. So this is kind of where we've gone to. We were in a down mode here, clearly in a down mode. We had lower lows, as you can see, just like this, and we had lower highs as we were doing that. That changed the minute we took out that prior pivot high right there a few weeks ago. A few weeks ago, with this high that we made right there. And then we made another high, and then another high, and then a low, and a higher low, and a higher low. So what that tells us is now we've gradually shifted our NASDAQ, and I've pointed this out with our user group, that you can see now we've had this shift right in that area there, where now the trend is slowly, it changed. It took about 2 weeks for us to shift through this, but now we've shifted and we're moving back in this direction again. So we were in this direction here, really starting at the beginning of March, all the way through to about the middle of April. All right, so in this area right there, was the time frame, about 6 weeks. Okay, so this is about a 6-week period when we hit the pivot low there. But it took us about a week and a half to resolve these issues and then finally come back up almost 2 weeks to take out that prior pivot high from right there. Okay, and now that we've done that, and then we made a new pivot low, which was a higher low than this one, and then another higher low here with these highs, and now we're establishing a new trend. This is how trend changes very gradually, and it can be very, let's call it very bumpy down in that area there as we go through these changes. But this is clear the direction that we're going right now. So using this as a gauge, the key points that we want to look at now are prior pivot highs and prior pivot lows. We want them to hold. If they don't hold, then we're going to slowly shift into a down mode or in a consolidation mode, okay? So, and you can see right there that pivot high was taken out at close on Friday with the NASDAQ futures, okay, right in that area right there. So now we've got these key areas. This to me would be a key area right down there, which is around 35.40 in the NASDAQ 100 futures. That's a key pivot low. If we come back down and take that out, then we're going to be back into chop again and possibly heading back down. But if we come back and then basically what we would like to see happen is a pattern that looks something like this. And this is just kind of how these markets are moving, and I'm not drawing my line exactly straight, but a pattern that comes down right in that area there. And perhaps the 50 EMA may serve as support because it's now got an upward vector to it. You know, it was moving down, and then we kind of did this little saucer bottom, and now we started moving back up. So we hit here, and then we come back up, and then we possibly take out that prior pivot high, which would be a prior pivot high if we come back like that. And then that gets us well and constant to this upward channel right here. All right, so we've had better than normal performance since the middle of April in the NASDAQ. If we step back out again, I know some people have talked about it, but I think this is close to being negated. You can see in the NASDAQ here, we did have what looked like the makings of a head and shoulders pattern, where you have that kind of rounded left shoulder right there, right? And then you had this big swooping head right there like this. And then over here, you started to have this kind of movement like that, which would have been a right shoulder or a possible right shoulder formation, but we needed to kind of move back down in that direction. We didn't get it. We actually came up there and took out this key pivot here on the left shoulder. So now, excuse me, we're now right up in this area here. So provided we don't come back down and just totally give it up in a couple of quick moves like that, then this head and shoulders pattern will be negated. So that's a pretty cool thing on the NASDAQ. Now, what I've been instructing all our members and what we've been watching very closely is not as much the NASDAQ, but the Russell. We've been getting a big divergence between the Russell and all the other markets. You can see here with the Russell, we're now in a mixed condition, but you can see this downward movement here in the Russell. And notice here with the Russell, again, like NASDAQ, we came down and we hit some very key levels here. You can see what was resistance there is now, has been nice support for us, just like the NASDAQ. But remember, the NASDAQ has started an upward movement with a channel like that. So is this what we want to see with the rut? Will the rut do the same thing? Well, we're going through that scenario right now, and it hasn't formed yet, but that's what we want to see. The NASDAQ, as you can see, is up in this area right here. So it's well ahead of the rut or the Russell as far as the trending bias. The rut is still in a mixed mode here. So what are the keys that we're looking for with the Russell? What are the key pivot highs, the key pivot lows? Well, again, as you guys know or should know, we're making lower highs and lower lows, which clearly has defined this textbook downward pattern, right? I mean, we've defined that. So we've got a level here that we want to take out, and then we got this level here we want to take out. So these two areas here, we want to take out. The first one is going to be this one right here, okay, which is around 1140, 1138 area, and then we want to take out the 1155 right in that area there. So these are the two keys that we want to take out. Now, if we come back down, we want to see, you can see the 200 EMA has been resistance and then support depending on which side of the price action we're attaching or attacking the 200 EMA. 200 EMA is relatively flat. The 50 EMA is slowly starting to become into a flat vector as well. So we want to take the 50 EMA out, take out that prior pivot high, possibly come back down, test the 200 EMA again, and then come up and do one of these kind of things like that, which would then give us the makings of an upward channel. And that would give us that 2-week, 2.5 weeks of chop that you expect when you have a trend change from that direction to that direction. And it works the same way going the other way. So this is my John Madden view of the markets right now. One other thing I wanted to show you, and people have been talking about, is volatility is very low. Volatility actually closed at 1136 on Friday. You can see here I've got, going all the way back, a couple of zones here for vol. You can see these zones really kind of initiated and started right in that area there, right in, and if we look at this, this is 2014 right there. That's 2014. And then you can see going back, this is 2013 right there. So these are 2 years here. Looking at the chart here, you can see that we're kind of separated, generally with this wide range right here. And when we spend time, excuse me, when we spend time down at the lower end of the range, we're met by spikes back to the up position here. We don't stay down here very low. So looking at right in this area here, the odds do favor a spike back up. Now, you never really know if that spike back up is going to get us back into one of these kind of numbers or not. You just never really know. But it does seem to indicate that the odds favor a spike in volatility back to the up position again. And if you look at the 80X indicator, we're down at a very, very low area here. That means at 8.29, which tells me that there is no momentum at all in vol. It's pretty much come to a halt right now, which means there's either very complacent in the markets, and what we want to see is if the markets have a pullback, okay, if the markets are moving up and then we have these little pullbacks like that, with these kind of pullbacks, on these pullbacks here, we'll know if there's complacency in the market or not, if vol stays down at this low level here. If it stays down here with some of these pullbacks, then we know there's a lot of complacency, and I would expect a bigger spike up. Otherwise, I think vol is going to probably stay south of this 1430 area right here, and then this would just indicate a continued grind higher. Okay, you can see this downsloping trend line that I have here. One of the things, and we've done this 3 times already with volatility, it's been a good trade for us. Every time we've had these spikes, it represents a 3 standard deviation spike or higher in vol. And when we do that, then we're basically coming in here as soon as we get that, and we're shorting VXX. All right. So these have been pretty good trades for us when we get these spikes. It's better to be short than long when you have these spikes, because it just gives it up very quickly, as you can see. And there's nothing to believe that this wouldn't happen again. And the other thing I wanted to point out, guys, and just understand that even though we're way down at this level down here, right? I mean, we're way down here. Folks, we were down here, and it made it up there that high in literally less than a week, maybe a week and a half at that level there. And you can see the time that it takes basically to get up to the top up here like that is not very long. I mean, these spikes, and they can move very fast, very fast. And you can see the width of these spikes here um, as we go from a low vol environment to a high vol environment. It does not take months to do. You know, in some cases, it can take maybe 4 days. In this case, it took about 3 weeks, right? Um, or maybe about 1.5 weeks there, maybe 8 days right there. And then again, about almost 2 weeks at that point right there. So these spikes do not last very long. And I would say the odds will favor it again, but the timing of when that's going to happen is always a surprise. That's why you have the fear and it moves back up. But if we do get back up into this area again, then I'm going to be looking at taking a short because it's going to fall. But again, this is kind of where we're sitting right now with volatility. So as long as it's down in this area right here, we're going to begrudgingly kind of grind higher. The other thing that really is fascinating to me is bonds. If we take a look at the long end of the yield curve, the 30-year bond, you can see right here, we're clearly in an up mode, and it's kind of suckered everybody this year in 2014. Everybody thought interest rates are going to go through the roof starting in 2014. But you can see right here, we entered the year down here, and now we're back up in this area here. So clearly, this has been an up move for bonds, and interest rates have stayed lower. So this tells me there's still a big portion of money that is in a risk-off kind of environment. We're not looking to take a lot of money and put it at risk with this bond market sitting up in this area here. Now, I do still favor shorting bonds in this area up here because I think bonds are going to end up back down in this zone down here. I just don't know how long it's going to take to get there. But I do believe in the second half of 2014, we may have a spike or two up at this next resistance level. But, you know, if we get up there, I'm going to be a shorter bonds in that area. All right, everybody, this is a very short update. I'd like to invite you to take a look at all of our special offers. I just did a new one that's really cool that a lot of people have expressed interest in. We've had a number of people come in and take us up on the offer on a monthly membership. I think it'll be pretty cool for a lot of you that are just looking for a way to get in and get more detail on some of the trades that we're doing. Anyway, take a look at it. I invite you to come on in and join us. Otherwise, have a great holiday weekend, and I will see our normal members in our Tuesday morning session. See you, everybody. Bye now.